Right, welcome to the Nadex Application and Strategy webinar series. My name is Daryl Martin. I'm with apexinvesting.com. I am a trader. Just like you, I trade on Nadex. I trade futures, I trade Forex, I trade Nadex, binaries, Nadex spreads, and love to trade them and trade them pretty much every day. And I do a radio show that just sort of happened to happen as I was teaching other people how to trade them, and it just sort of grew from there. And so we got a site now. I'll talk to you about that here in a second. Before we get into all those details, got to throw the disclosures up there. Trading involves risk. Make sure you know what you're doing before you do it. And this is unique information provided by Apex Investing. And again, trading involves risk and may not be suitable for every investor. All trading decisions you make are your responsibility. This is not an offer for you to buy or sell any particular instrument or put money at risk. All right. So with that out of the way, first things first, let's get you going. If we go on over here to nadex.com, how to get your demo account set up, and if you go to trading and go over, let's see what there is, trading demo trading platform. Click on that link, fill in the information. Okay, first name, last name, username that you want, email address, phone number. That'll load up here in a second. I just have all the audio and recording stuff going. Fill that out, and then in a few seconds, you will get a link in your email with a password. I recommend you log in immediately to your demo account. You'll have $25,000 of funny money in there. Go to My Account, and then under that, you'll see a Settings tab. Under the Settings tab, you can go to Password, and then put in your current password that they just gave you, and put in the new password, hit Submit once that loads up, and then change it to one a secure one that you'll remember. Okay? But that's the first step to get you set up and going. Now, to get yourself a live account, all you got to do is click on Open an Account for free, and then fill in the form on there. It takes about 5 minutes to get started. Okay? So it's pretty fast to get a live account going. So just open an account for free. About 5 minutes to go from start to funded. So very fast, very simple, very easy. And a big benefit of that is, of course, if you have a demo and then you get a live account and you fund that account with a minimum of $100 or more and place at least one live trade or more, then you can email or call Nadex customer service to get your demo extended out for a year versus expiring in a couple weeks. It's a little tip for you there. But that's what, you're going to want to have access to that. The next thing you're going to have access to is our website over here at apexinvesting.com. It is a trader-built community. It's traders helping traders. It's free to get a membership. We do have, other services, but we have over, 300 or 400 hours now of free education. We have binary scanners, spread scanners. There's a lot that we have inside the site once you log in. So just click on the, click here to get started there on the homepage. But you'll see that there's a forum right here where you can ask all the questions you want. You can find a lot of questions that other traders have asked. And you can go in here, and there's courses. Like maybe you need underlying charts. You don't have futures charts. You need futures charts. We'll talk about that. But it's very important that you have futures charts and even Forex charts. And even if you just trade Forex on Nadex, it is very wise to have futures data because you want to use real volume data. And you can get that with futures data. I show you how to get access to underlying platforms and live data on futures and Forex for free. So definitely take that course first thing. And then there's other, courses on here that you can take that you can check out. We have a scanner you can check out. It goes in, it makes it a lot easier to trade on Nadex. And so just click on that, it'll load up, and it'll help you find those Nadex contracts really fast, really easy. Okay? A couple questions that I got real quick are, where is your radio show? It's actually, it's all over the country, but it's broadcast inside the website under education. So if you go to education down here to radio show archives, you'll see a link right there. It'll be broadcast on there. You can actually see my screen. There's even an archive link you can check out. And then another question, do they have replay data? They do not have replay data. We do have a binary calculator that actually records all the IV, calculates all the replay data. We're using that for our own engines. We are hoping in the coming months to actually implement that inside of our scanner as an additional function. And somebody asked, what do I use to record? Well, I record in GoToWebinar, and I make a backup with Bandicam. All right. So that gets rid of the quick questions real quick. And with that, like I said, just check it out. We got deviation levels in here. Basically, think about them as really, really, really strong support resistance levels you can use for your trading. But it's a gold mine of information. You just got to dig and figure out what it is that you're looking for. If you need any help on that, use the forum, use the chat. We'll be glad to help you. Okay? Now, once you got that set up, because you're going to need that basic education. Okay? And again, basic education, we have all the education under the education tab. So not only do we have all the courses over here, but we also, if you go on down, you can see where we have like a whole Nadex section. Nadex spreads, Nadex binaries, Nadex platform, basics of Nadex, what you need to understand. All that's right in here broken down for you, so you can go check that out as well after the webinar. So if you feel a little bit lost, then there's a lot more education to help you out and keep you going. Okay? So tonight we're going to talk about Binaries 101. So this is an introduction to binaries courses. Now, maybe you've been trading binaries for a while. Maybe you haven't. A Nadex binary is completely different, and I actually cover that in my binary course. But I talk about why Nadex binaries. This is the name of the video, and I go into the difference between overseas binaries and Nadex binaries. And basically, they're regulated by the CFTC. So that's the same regulatory body that regulates the CME, where most of the futures are traded here in the U.S. They are in the U.S. They are located in Chicago. Your funds are held in the U.S. Your funds are held in a segregated account. And when you place a trade, you put up the full risk on the trade, and the other side of the trader has to, the trader on the other side, whether it be a market maker or a trader, has to put up the full risk. So therefore, that obviously helps protect you, the full risk being up there. So meaning, like, if you're profitable, their loss, vice versa, whatever, then the funds are held up there separately. Nadex is not trading against you. They are not what's known as a market maker. They are an exchange. So they connect buyers and sellers together. They have no interest in you losing or you being profitable. They are there to facilitate the transaction. They are the referee, whatever you want to call it, but they are in between you and the other trader. The other trader, therefore, doesn't know who you are. The only thing they can possibly see is an order that you place, just like any other market that's on an exchange. And that's a massive edge, a massive benefit, because somebody can't target you. They don't know who you are. You're just placing trades. You could be one of, obviously a lot of people that could be placing trades. So you get the anonymity, but you get the transparency of the pricing by it actually showing what the bid and offer prices are, multiple levels deep, what the bid and offer sizes are as well. We're also going to talk about what's the value of an Nadex binary, what markets can you trade and when, how to place orders, and getting started with Nadex. So, first we're going to let's go into what are they, how do they work, how can they be traded. So, some of the benefits, if you're trading a binary is an instrument you can use, and you can choose depending upon the strategy you choose. And I teach you a lot of different strategies. I teach you in the money, out of the money, at the money. I teach you butterflies. I teach you double binaries. I teach you premium collection strategies. I teach you trend trading collection strategies. I teach you all sorts of different strategies. But many of those strategies involve the ability to not have a stop loss, because your maximum risk never grows on a trade. Which means you can't be whipped out of a trade if a market spikes on you. You have a limited defined risk. You know that risk before you get in. So it's not like, how much can I lose if it goes way against me? It's like, no matter how far it goes against you, you know your maximum risk up front. The maximum risk, let's say if the risk is $30, you have to put up $30. If the maximum risk is $70, you got to put up $70. So what that means is, if you have to put the maximum risk, there's no what's called a margin call. That's the call you never want to get as a trader. A margin call is, hey, we let you put some money up, but you lost more than what's in your account, and now you need to put in more. That can't happen at Nadex because you put up all the risk up front. So therefore, if you don't have the money to put up the risk, then you can't put up the trade. So you don't have to worry about getting a phone call saying you owe money. And you can do one contract, you can do hundreds of contracts. It just depends upon the market and what the liquidity of that market is. So what are binary options? They're short term. They can be fast moving. And the reason I say they can be is the closer you are to expiration, the faster the binary's price will change. Some people like the speed, some people want them slower. The further you are from expiration, the slower the price will change. So I know traders that literally they make their money just using longer term binaries. I know some traders that literally they're in the trades for 10 seconds. So it's not a right way, it's just what way works most efficiently for you. Okay? At expiration, there's only two possible outcomes. Okay? $0 or $100. Now, when you hear $100, don't think that's the most I can ever trade or make. Again, you could do 1, you could do 100. That'd make it, if you did 100, that'd be $10,000 value. But you can do whatever quantity you want. But on a single binary contract, and we'll keep it simple and focus on a single one, $0 to $100. Okay? And that is huge for you to understand that, because it's not a variable payout like the Nadex spreads. The Nadex spreads are completely night and day, completely different instruments. And you want to know that, because if you don't know that, you'll be very upset. Because you'll be like, what's going on, and how does it work, and I don't understand what just happened. And so if you enter a trade and you hold it to expiration, you will either get no payout or a $100 payout. So let me help head off a question that comes up a lot on new binary traders. If I put up $30 of risk on a trade, I put in a buy for $30, and I get a payout of $100. Remember, they took my $30 out of my account because immediately my risk is put up, and I get a payout of $100. It says settlement payout $100. How much money did I make? And I know this seems really obvious, and I'm really asking you to answer it. How much money did I make? So, James, first person, good job. $70 on the trade. So, I put up 30, I get 100 back. Like, I give you 30, you give me 100 back, I make 70. I put up $30 on Nadex. They give me 100 back. They gave me a $70 profit plus my $30 in original risk. Okay, so if you are profitable, if you held it and you are profitable, you do get the original risk back plus the profit. A lot of times people go, well, do I get my original money back, or is that gone? It's not a fee. Okay, a fee is gone. Okay, you get your risk back, you get your profit back if you're profitable when you hold the trade to expiration. Now, you also have the ability to exit the trade before expiration. So I could enter at, like I could enter right now at 7:15 or so, and I could exit at 7:20. I could enter at 7:15, and I could exit in the same minute. I know people who literally are entering out of trades in seconds. So you can enter and exit whenever you want to before expiration. So that's a really good benefit. There's nothing holding you back from exiting. And I'm going to give you a lot of little tips as we go. Okay? So another little tip for you. In the last 2 minutes, usually other traders, market makers, are not making a liquid market. So if a contract expires at 8 p.m., they will stop making a market. You really won't see a lot of liquidity. You'll see it go from like 100 to nothing, like no bid or offer sizes. At what time? If 2 minutes before expiration, the contract expires at 8, when should you expect it to be more difficult to get out of a trade? And this is important because a lot of people hold that trade and they're like, I can't get out, and they get all upset. So there you go, 7:58. Got a few people. All right, so yeah, definitely respond to these. It makes it go a lot smoother. There we go. So, okay, all right, now we're getting some more responses. Good. So 2 minutes before, it doesn't mean you can't get out, but it is going to be more difficult to get out 2 minutes before expiration. It could be more than that, but usually it's 2 minutes. I mean, I trade these day in and day out, and usually about 2 minutes before, you don't see a whole lot being quoted. Okay? So they can be held to expiration. They can be exited before expiration. So you can enter at 30 and exit at 60. Right? You can enter at 30 and then exit at 15. You lose 15. If you enter at 30 and exit at 45, you make 15. Okay? So just remember that as of expiration, the event will either be true or false. And we'll talk about what I mean by event here in just a second. One of the greatest things that I love about binaries is that you can get a change in value if the market doesn't even move. Now this past week was incredibly volatile, and that's awesome. That gives a lot of volatility opportunities. So you can trade them in really volatile markets. But some days, some nights, some of you are nighttime traders, the market's really flat. Well, you can actually collect premium, and I teach you about premium collection over at Apex Investing, so you can check that out. But you can go in there and you can buy a contract and just let time pass and actually be profitable. If the trade stays flat, goes in your favor, or even moves against you a little bit, you can actually still be profitable potentially on the trade. And so with that ability to have volatile strategies and flat market strategies, you have a lot of different trading opportunities. Okay? Again, even if the market's not volatile, you can go in there and you can take advantage of that. And you can take advantage of what would be known as a higher percentile return, meaning if the market has to move for you to be profitable, obviously you have a lower probability of being profitable because it has to move in your favor. If the market doesn't have to move, can move in your favor, or can stay, or even go against you a little bit, and you still be profitable. Obviously, that's a higher percent probability, which actually goes a lot into the pricing model of a binary option. I also talk about that, okay? So just be aware that you don't just have to buy the binaries. And a lot of people go in or buy them like, really cheap ones out of the money and have to have the market move. You don't have to have that happen. All right, so even if not volatile. Now, what about your risk-reward profile? Okay, so if you look at any binary contract, if I open up a ticket right now and I look at a binary contract, what I'll see is that the floor is 0 and the ceiling is 100, and that will be on every single binary contract. Okay, not just on this market or that market, like they vary on the spreads, but on the binaries, the floor is always 0, the ceiling is always 100. Okay? So the floor of 0 captures risk on a long position. So if I go in and I buy it for 20 and the price can't go lower than 0 on the binary contract, I stop losing money. Okay? I'm still in the trade, which is cool. So, but I don't have to have a stop loss on that trade if I choose not to. I don't have to get out before it expires. It could go way against me, and if it comes back, I could still be profitable on the trade. It could go against me by a few ticks, and it could still come back in my favor. Now, the ceiling of $100 captures risk on a short position. If I sell a contract for $80, I want to buy it back lower, right? You want to buy lower than you sell, okay? And you want to sell higher than you buy, always. And this, as obvious as that sounds, that does trip people up. And they go in there and they're like, okay, so I bought for $50 and I want $5. I want to take a profit when there's only $5 away, so I'm going to sell back for $5. Well, that'd be buying at 50 and selling below yourself at 5. We'll buy at 50, sell it at, say, 95. Okay? So, back to that original point, if I sold at $80 and my ceiling is $100, then I can't, if I sell at 80 and I bought back at 100, I'd lose $20, right? But it can't go to 105, 120, 150. I can only lose $20. If I sold at 80 and I bought it back higher, I can only lose up to the $100 ceiling. Okay? There's never risk more than $100 per contract. You can do a lot of contracts. You can do one, you can do hundreds, it depends upon the market. Now, they're always settled at the cash value. There's no delivery, no physical, there's no stock certificates, no futures delivered to you. You don't have any, gold bars being delivered at your doorstep or having to, get them ready. When it expires, if it expires at 8 o'clock, when it expires, usually within a few seconds, if not, a couple minutes, but usually within a few seconds, it'll automatically calculate that expiration. It's on autopilot, okay? It'll automatically calculate that, and it will either, if you lost on the trade and you earn a binary, there'll be no difference change to your account because you already have the debit out. If you're profitable, you'll see the risk and the reward put back into your account, okay? So don't have to worry about settlements, and you don't have to do anything. It just automatically happens. So either it was or was not profitable. So first, let's go ahead and look at the risk reward on a binary contract and a long position. Long means that you're buying, okay? It's going up, long, going up. So if we buy one Nadex binary at $25 and the maximum value of a binary is $100, what is the maximum profit we can make on a trade? So it's right there in front of you, all right? So $75. All right, so very, very simple, but just want to make sure you really have that down. If I buy at 25, the most I could make was 75. The most I could lose would be how much? So $25, real simple, okay? Now, what if I bought a contract at $75? What's the most I could make on that contract if it only goes up to 100? $25. The most I could lose on that contract is $75. Okay? Now, at first glance, when you see that, you're like, why would anybody do that? That looks really stupid. Okay? Well, remember how I talked about those higher probability positions where the market could go up, stay flat, or go against you a little bit, and you could still potentially be profitable on the trade? That's why. Higher probability, higher price. Okay? So, what do you think a binary would be priced at? So this would be like, if it costs $75, it's sort of like saying there's a 75% probability of that binary expiring in the money. What do you think if the market, if the strike on the binary was at 1700 and the market was at 1700? what's the probability of that expiring in the money? So if the market itself, if XYZ market's at 1700 and the strike is at 1700 that you're buying, what do you think the price of that binary contract would be? What's the probability if it's already at the exact strike? There we go, $50. This is a 50-50 probability that it could expire and or out of the money, because it basically it has to either move up or down, right? It's just, I mean, like one tick makes all the difference. Okay? Now, does that probability change if you have a week till expiration, 8 hours till expiration, or 10 minutes to expiration? As of that moment, what is the probability? It's still 50. This is probably one of the most important things I can teach you in understanding 8x binaries, is that the price of a binary contract, when the market that binary's on gets to the strike, the binary itself will be worth about $50. Okay? So if I bought a contract at $25 and the market went up and got to my strike, what could I expect to potentially get out of the contract for? So if I bought it at 25, I could get out, there you go, Darby, I could get out at 50. Now, what if I bought a $75 contract? Market has to, if the market stays up, I'm profitable. Market stays flat, I'm profitable. Market goes down a little bit, I'm profitable. What if it comes all the way back down to my strike? What is the price I should expect the binary to be at if it came all the way back down to where my strike was that I bought? 50. So I could buy a $75 contract, but if it moves far enough against me where the market comes down and touches my strike, I could get out at about $50. Okay? And it doesn't matter whether it's 5 minutes, 5 hours, or 5 days until expiration. And that gives you a solid number you can easily know on what will a binary be worth when it moves to a certain price. Now, we do have a calculator you can use to help you out. I'm not going to dive too deep into this. We have a whole training section on it under the scanner. We go into the scanner and how it works on the courses. Okay? And the scanner is free for you to use on live and on demo. And you can go in here and you can simulate and you can actually put in a price on a contract and say, let's simulate a range of 20 pip tick move there on the underlying. It'll tell you what will the binary contract be worth if it moves that far. Okay? Now, this doesn't account for 20 minutes passing because that will change, but it does account for if the price moves, in the near time frame. Biggest thing is the price I buy a contract for, and this is what I want you to take home from beyond the $50 thing. What I want you to take home is the price I buy, and I buy when I think the market's going to go up or stay flat or whatever, but I don't think it's going down, okay? When I buy a binary, the price I buy a binary for is my risk. So if I buy it for 20, my risk is 20. If I buy it for 50, my risk is 50. If I buy it for 80, my risk is 80. My reward is $100 less what I bought it for. Now, I don't have to do a whole lot of math because when you open an 8x contract up, they'll show you the math. Also on the scanner, it'll actually show you what the risk and reward is on the trade. If you bought it for 12, risk is 12. Profit potential is 88. So you can even see all the risk and rewards without even opening a contract. Okay? So hopefully from that one slide you've taken away the cost of a binary contract. When I get in, the price of the binary is my risk, and $100 less, that is my reward. You need to get that because it's opposite for sells. So that rule applies to bought binary contracts. Okay, now let's talk about sold contracts. On sold binary contracts, what I sell for is my profit potential. $100 minus that is my risk. Or you could say the price I sell for minus $100 to get the negative number is my risk. So on a bought binary, the price I bought for was my risk, right? On a sold one, the price I sell for is my profit. It's the opposite because you're selling. So if I sold for $75, what would be my profit potential on a trade? How much could I make on the trade if I sold it for $75? And if the price I sell for is my profit potential, my maximum profit potential, what's the most I can make? $75. What's the most I can lose on the trade? The lowest I can lose is $25. Now, what if I sold it for $20? What's the most I could make? There you go. Excellent. Desmond. Awesome. So $20. If I sold it for $20, the most I could make is $20. Okay, really important to understand that. Whatever I sell for, the most I can make is the price I sold for. Okay? If I sold it for $70, what's the most I could make? So $70. What would be my risk if I sold it for 70? What's my maximum risk on a trade if I sold it for 70? $30. Perfect. What if I sold it for 40? What's my maximum risk? So $60. What's my maximum profit? $40. Okay, you got that down. Everybody seems to be knocking that out back and forth. Easy. So right here, here's another example. If I sold for 50, I could make 50. The most I'd be risking would be 50 because $100 minus what I sold it for. Okay? And it can get a little confusing when you're thinking about it. And that's where I learned that, just to put that in my mind is the simple rule. What I sell for is my profit potential. What I buy for is my risk. If I'm going long versus going short, or buying versus selling. Okay? So that way you don't get confused whenever you sell and think the wrong thing. Because some people go in, they sell for 70 and they think their risk is 30. Okay? Or actually they'd be right. They sell for 30 and they think their risk is 30. Okay? Because on the buy, when you buy for 30, your risk is 30. When you sell for 30, your risk is 70. Your profit potential is 30. Does that make sense? Anybody have any questions on that? We good there? Okay, good. All right, so when you open up a Nadex ticket, and they're always updating their platform and adding all sorts of good stuff on there, but you go in there, and when you open it up, they're going to put a price of the contract, so 85 by 79. This is the buy side. This is the sell side. Okay? So again, this is the buy side. This is the sell side. So if I want to buy for $85, I can just actually click on that contract. So if I go up here and I go to Nadex, and let's say I go over to the Binaries, and I go to the euro dollar, and I go to 8 o'clock, and I click on this contract right here, it's going to open up. I can buy it for $12. Okay, let's say the market moved. I can click the current market price, and it will update to that. If I clicked over here, it updated to that. Okay? So you see that? So I just click on the price. It'll show me what the current market price is. Now, I can try to buy inside the spread there. I can try to buy it for $11, $10, $8, whatever. I can try to buy it for whatever I want to. But another trader would have to take out my trade. Okay? So in order to do that. And you can click on any one of these. Somebody's taking all the book out right now. Anyway, so you click on these, so $72. I could buy for $72. If I click on that, it'll update to whatever the current market price is at. Okay? If I choose this price, as long as the market doesn't change before I go in there to get it, I'll get my fill. Okay? Whenever I submit my order, I'm going to get the best price available at the price I'm submitting. All right? So tickets have updated a little bit. They're always adding new changes. So these are the demo tickets. So the live ones will be transferring over here probably in a few weeks. All right? So that's how a buy works. You just click on the offer side, and then you can update the price really easily just by clicking on where the market's currently trading at. Any questions on that? And really, don't let the new tickets overwhelm you. They're not that much different. Okay? You got to offer, you got to bid. They're just showing you the depth. Okay? We can click on here and get even less if we want to. And then we got the size, we got the price. So do I want one contract? Do I want 10 contracts? Okay? Ceiling floor, max loss, max profit, all that's calculated there. So they're really not that much different. They've also added in what's called the indicative index. I don't recommend trading off that, but they've added that in there, and they've also added in the minutes till expiration. Okay, so the midpoint is your probability. We talked about that already. So the reality is you got what's called bid offer spread. If you try to buy at the bid, you're probably not going to get filled unless the market moves down in your favor. So 79.85 is a $6 difference. Divide that by 3, and you got 82. Or $3 divided by 2, you got 3, and then add 3 or subtract 3 from your side. The mid is 82, and that basically is the market is telling us there is a 82% probability that binary will expire in the money. Okay. If it does expire in the money, it'll be a $100 payout less the risk that was put up. If it expires out of the money and you bought, then it would be a losing trade. There wouldn't be any additional payout. All right. So we got, again, just making sure you really got this down. On a buy side, if I went and I bought the contract for $85 or I sold it for $79, if I hit buy right here, I'll get buy, $85. If I hit sell over here, it'll pop into sell. I got my reward potential to sell for $79. Okay? So a lot of people go and they try to buy at the bid and they wonder why they're not getting filled. Now, let me explain to you why you're not getting filled. This is what's known as a limit order. Okay? A limit order means that's my limit. That's the most I'm willing to pay. I'll pay $30, but I ain't paying a dime more. Okay? Or I'll pay $10. I ain't paying another dime. It's my limit. So if I put an order in to buy this contract at, let's just say, $18, okay, then you'll see my order over here because I have a buy, which means I'm looking for somebody else to sell it to me for $18. Because I said I won't buy for, a dollar, a penny, or a quarter. Well, it's a quarter because they take in quarters. I won't go and I won't buy for a quarter higher than $18. I'll buy for $18 or less. So my order goes into the working order section. And that's why I'm not filled, because I tried to buy lower than where the market was at. Now, if the market moves on me, I may have to adjust my order. Maybe I go in and I put in 18, the market just flew real quick. Or let's say I put in 36 or whatever. Then I can go up here and let me close these out. We'll get rid of all these tickets. Okay. So I go over here and I say, you know what, I want to adjust my order to, $31. Maybe the market was at 31 and I did that. And I said, amend my order. Oh, somebody's going in there. $24. And I say, amend my order. Okay? Then it's still working because the market's not at that price yet. But if I hit $24.50, boom, it went up. Now I got filled. Okay? Oh, still not working. Okay, so that's at 37 because I amended my order. So let's go ahead and we have it $34.50. Let's change it to, there we go. We ought to be filled any second here. So go in, amend the order. Boom, it's filled now at $34.50 where the market's at. And I got filled at $34.50. Okay, average price there. And so I'm in that trade, 10 contracts. I can go over here to close it. I just click on the open position. I want to sell. Let's just say I want to get out. I want to cut my losses. Whatever reason it is that I want to get out of the trade. And I just hit place order. This is demo, so I don't really mind hitting buttons. Okay? And now when it's working, when it open, boom, open is now gone. My position is now closed. If I want to see what orders I placed, I can look in the order history. Right over here. And I can see the orders I put in. I sent these. They were canceled. They were filled, etc. I can see every order I placed right there in the order history. Okay? I can also go over here and get my order history out of the transaction, order history, or statements reports. So with that, could everybody go in now? Do you have the ability to hit a button, put on a trade? Here, go over here to the 3 p.m. So it'll be more liquid. So go in, I buy that order, hit buy, hit place order, order placed. Okay. Now it's in my open positions. If I want to close it, then I just update it to the current market price, get out right now if I want to get out. Or I could buy, close it, and then let's say I want to take profit when the market goes up to $70. I can hit 70 on there, hit place order. Now I have a take profit order sitting there. I just hit that little green arrow next to it. Have a take profit order sitting over there. And you can see my take profit order working. For whatever reason, something on my chart tells me, you know what, I just need to get out of this trade. Open it back up, adjust my price from 70 to 38.50 and hit amend order. Submits it, done, and filled. Okay? So this is just Nadex platform trading. It's not so much binary trading. But does anybody lost? So are you lost about how to hit the offer side to open up a ticket? How to see the price there? And how to hit place order? Is that confusing to anybody? Is it confusing to anybody how to hit the green arrow next to your open position? Type in the price you want to take profit when it moves up and hit place order, and it goes into working. And once it's at working, If you decide that you want to edit it and you want to bail on the trade, you click it. It'll pop up an order in the opposite direction, that size right there, and you hit amend order. We'll bring it down to 53 on the trade, and 52, 53 as it's moving. Hit amend order, and now I'm out of the trade. Okay? Very simple. That's entry, that's setting a take profit, that's adjusting a working order. That's all there is to it. And the beautiful thing is it's demo. You can't break it. Go in there and press some buttons. Okay? Do it. Go, okay, this is what I think is going to happen. Is that what happened? Okay, so my question for you. If I went in and I went to buy this contract at 50, would I get filled on it right away? What would happen? If I put an order to buy that at 50, would I get filled on it immediately? Or would it be sitting there? No, I'd go into working orders, right? And I bring this up because I don't know how many new traders be like, I put an order in, but it's just all my orders go to working. And a lot of times what they do is they end up buying it, they want to buy at the bid price. Well, so does everybody else. Unless you're a market maker, you're not getting that, okay? So, if I want to buy, if I buy for less than where the offer's at, I'm not going to get filled because I said I'll buy at, right now, I'll buy at 57 or less. If I put this order in, I'm not getting filled. Okay? It's a limit order. So I will buy for this price or less. Now, what about on a sell? A sell is a limit order. Okay? So if I say I'll sell for $52.50, but I won't sell for a penny less. All right? Maybe think about it. You're selling a car. Well, you list it for 10, but hey, you won't take anything less than 8. Okay? Your limit is 8. Okay? So one way to get in at market is I could go in and put it a little bit above the market. I could put it in at, say, 67. And if the market ticks up a couple ticks on me, a couple dollars on me, I'll get filled at the best price. I want you to watch what happens. Okay, we're going to pull up our order history so you can see this. All right, watch what happens. I'm going to submit this to buy at 67. The offer price is 57. Okay? I submitted the order. I submitted it at 67. See, order sent at 67. I got filled at 57. So that is how, to answer your question, Scott, that is how you would get in at market price. Put it a little bit above where the market is. You'll get the best market price. That's available as long as it's less than the limit you entered. Okay? Any questions there? We good so far? Cool. Now, also, if you go over here to use, say, the scanner, we go down to the 3 PMs again. And click on that. It opens up and fills in. Then you'll see, same thing, you can just adjust it. So just click on the buy price or the sell price to open a buy or to open a sell ticket. Now you can adjust the price, you can adjust the quantity. All right. So, that is how you enter a buy order. So we can get out of that order again. We just open up, hit the green arrow. I could say, sell it at 40 or higher. That's what I'm saying, right? Limit order. Submitted it at 40, is at 52.50. It got me out at 52.50 at the best market price. So a question comes up, can you buy at the sell price? Yeah, I can enter a buy at the sell price. It doesn't mean I'm going to get filled. I can enter right here, buy at 52.50. I can enter any price I want to get in at. But when I hit it, it doesn't matter what platform you're using, Mike. If you enter at the buy price, you're not going to get filled at the. If you enter at the sell price, you're not going to get filled unless the offer comes down to that price, or somebody comes in and takes out all the offers and comes down and fills your order. Okay. So it'll just go straight into working orders. So you cannot buy at the sell price, you cannot sell at the offer price unless it comes down to that price. I can also delete any tickets. I don't just have to amend them, I can get rid of them. So let's say I don't want to get on that trade now, I can get rid of it. Okay. Now, what about sell orders? Okay, we talked about buy, sell. Got all this stuff on here. It looks really complex. It's really simple. One thing I want to note for you, we said the price is a reflection of the probability. So if I buy at 80, well, let's just say the mid price of bid offer is 80, which is you take the bid plus the offer and divide it by 2. Okay, or you just look at the bid offer spread, 82, 87, that's a $5 difference. Divide that by 2, that's 250, add 250 to 82, and we can get all complex. Doesn't really matter. You don't have to get tied up into a couple percent, okay? But if I sell, then that's the probability, okay, that it will expire out of the money. So the price I buy at is the probability it'll expire in the money. That's a quasi, probability. It's market pricing. Then the price I sell at is the probability it'll expire out of the money. So it's upside down. It's backwards. Okay? Any questions on that probability? Okay, so if I want to do a sell, and I did get a question about what's the liquidity like. One of the great things is you don't have to guess about the liquidity. All you got to do is log in. Okay? So, here, let me open this up. Give me a second. And I'll open something up and show you. And there we go. Okay. So like over here, this is a live platform. It's dark blue. Demo is light blue. That's how you know if somebody's showing you live or not. The color of the platform. Okay, plus if you can see the URL, if somebody sends you a screenshot, you'll notice it says demo and it doesn't say demo in the live. If you ever want to see liquidity, just log in and look, because it's going to be right there for you. Okay? Demo and live can be different because live has market makers. It has live traders, right? So they can be a little bit different. You maybe see multiple, actually during the day you'll sometimes see multiple depths. But what this says is the liquidity right now on this, if you want to get a full fill right now, if I go in for $100 or 100 size, see my size, offer size, I get 100 at 18 bucks. If I submit the order right now, okay? So that's my offer size. And that size stays fairly consistent day to day to day to day, okay? Now, as you get closer and closer to expiration, that price is going to impact that size. But they have thousands of contracts that list every day. And it ranges anywhere from, little 5, as you can see, it can go up to 500. Depends upon what contract it is you're trading. Now, if I take out all 100, let me show this. I'll do it on a cheaper one. Killing my demo account here. But I'll take out all 100. Wow, that has one order on there. I'll buy the other one at 80. It makes me really happy. And I place that order. And notice how we have one at 80. So if I take that one out, now we have no liquidity, right? It doesn't mean it's 100 all day long. In a couple minutes, it'll pop back up, and it will say 100 again. If you try to outtrade the size, though, you better make sure you have the bankroll to do it. 2, just be aware. There is risk in any market. I don't care if you're trading options. There you go. See, it popped right back up. Now there's another 100. Okay? So right there. Another 100. That was 0. Now it's 100. Okay? In any market, I don't care if you're trading gold futures. I don't care if you're trading S&P E-mini options. I don't care if you're trading, GLD options. I don't care what it is you're trading. You need to look at the liquidity and not outtrade the liquidity. And the liquidity that you'll see on Nadex is you actually get to see the depth. You get to see how many contracts are there, and you do see how they refill it. Now, one of the questions that comes up all the time on liquidity, so I'm glad you brought it up, Scott, is why can't I get out of this trade? I bought this for, this price, and now there's no quote on the bid side. Okay? The bid-offer spread. Now, remember, a contract can't be worth less than 0 and can't be worth more than 100, right? We have a floor of 0 and a ceiling of 100. The bid-offer spread on this is about $4 right now. And you actually can't sell at 0. You can sell at 25 cents if somebody was crazy enough to buy it from you because they'd lose money on fees. But if the bid-offer spread takes it to 0 or 100, so if I buy at 4, and let's just say the bid-offer was 4, what would that make my bid? So bid offer spread was $4 and I bought the contract at 4. What does that make my bid price? 0. It makes it 0. Right? Because the bid's going to be lower than the offer. Right? If there's no bid, because the bid offer spread puts it outside basically to that 0, that 100 price, then there's not going to be any liquidity on that side. Nobody's going to sell the thing for 0 to you and pay the fees. They can't make anything, and you have no risk. Okay? And due to that, when you see the bid disappear, you'll notice the size will drop down. So far out of the money. Okay? Or if you go down here, 95.50. Well, I mean, some of these are about 450, so that's going to push it right up to about, 99.50, 100 in this case, at a 450 wide bid-ask spread. Nobody's going to buy from you for 100. They can't make anything. The highest it can go is 100. So again, if my offer was, my bid was, make it simple. If it was 96 and I had a $4 bid offer spread, what would the offer be? So if the price is 96 and I had a $4 bid offer spread on the bid side, on the sell side here, what would the offer, what would the buy price be? It'd be 100. Nobody's going to put a quote up for 100. Okay? So your bid offer size goes away when you've surpassed 0 100 on the bid and offer. So it might be a good idea to get out, right? If I sold at 90, okay, and let's say I sold 100 contracts, would I want to get out at 6 or 4? Where do I have a lot more liquidity? If I sold a contract at $96 or $90, whatever, and the market dropped way down, would I want to get out at $6 or $4? I mean, 4 is a nice number, but look at how the liquidity is, poof, gone. Okay? So yeah, I don't want to get out at 6 because there's 100 of them. Okay? So that's probably one of the biggest tips I can give you right there. Just these are little things, but they add up, and they help your learning curve. And we talk about these a lot in our education on our site. We go through all this stuff, even more detail, and we focus on a topic for like an hour. Right now, I'm just trying to get you Binaries 101, get you introduced, and try to give you a little bit of tidbits along the way as well. Okay? So if I want to sell a contract, let's go into placing an order. If I sell a contract for 38, my max profit is 38, right? If I sell a contract for 67, my max profit is 67. Remember, what I sell for is my max profit. What I buy for is my max risk. So if I go in and I sell for 67.50, I hit place order. That order gets filled. I can make 67.50 per contract. It'll be in my open positions. And if I want to get out of these trades, I can buy them all back. Put that in. But anyways, you can place as many orders as you want. It doesn't really matter. It's demo. And I literally encourage people to go in and just mess up a lot and demo. Okay? It won't hurt you. If anything, it will help you learn how to trade these contracts. So again, I took out 101. I got to wait for another 100 to come in. And once it fills, it'll all be in there. Do I have any questions on doing a sell order? I sell by clicking the button. I make the price what I want it to be. I can make it higher and let the market come up. I can make it lower and get filled at the best price. If it goes into working, I can adjust it. I can cancel it. Or if it's an open position, I can edit it. Sell works the exact same as buy. It's just opposite. Okay, just click and all your stuff down there. Okay? So over here, I'm long 202 contracts, so I'd want to sell out of those 202 contracts at whatever price I can get, probably, and I could sell it, Go ahead and just put 100 in there. Place order, knock out the first 100, 102 are left. When it repopulates, do another 100. And I don't have to do it like this. I can do it piece by piece. I can do any size I want to. Okay? All right, so that's just how to get in and out of an order. Now, if that seemed fast for you, again, we have a whole section over here under education that's going to go into how to use the Nadex platform. Okay? I even have a video on the demo platform, or not the demo, but the mobile platform, because you can trade on your iPhone, trade on your Android, and you can trade on your Windows phone, and they have a really cool iPad app as well. All right. Let's see here. So we got the sells. We got down how that works. Let's talk about what you can trade. What markets can I trade? And you can trade, stock index futures. They have international and domestic ones. You can trade spot Forex. You can trade commodities. They even have economic events. Okay? Different markets are better at different times. Right here we got a list of, the Dow. We got the S&P. We have the CMEs, NASDAQ. We have the ICE Russell 2000. Okay, small cap contracts, the futures there. And they follow those contracts. So the Wall Street 30 follows the Dow. The US 500 follows the S&P E-mini 500. And help you out, I list all of them off under here under help and tutorials. And, actually it's under Nadex information. And if you go over here, you can look at current underlyings, and they'll tell you, here's the contract name for Nadex, here's the symbol for that future, and here is the actual name, the description of that underlying contract. Okay? Now, what's really important is that you're looking at the right chart. Okay? Indicative charts that Nadex offers are awesome. They are great for when you're on the go and you need something quick and maybe you don't have another app that gives you live underlying data. But while you're making your trades, until you get down to the last couple minutes when that indicative does matter, but while you're making your trades like any other time, you need to be looking at a real chart, not a web-based chart, okay? Not these free web charts. They aren't actually live, or they aren't actually looking at the futures. They have a lot of disclaimers. They'll say free, live, futures, and then read the disclaimer. It's like, actually is based upon a CFD and may not be live. Don't be using stuff like that. You can still get free live data. Again, our first course under education shows you how to do that. Make sure you're looking at the right contract. Don't be looking at the diamonds to trade the Wall Street 30. The diamonds trade at a different price than the Dow. Don't be looking at the spiders or the SPX to trade the S&P 500 index futures. The ES, E-mini, CME E-mini contract trades at a different price. And sometimes that tick matters, right? Because one tick can make all the difference. All right? US Tech 100, be looking at NASDAQ, not the Qs. Don't be looking at IWM on small caps. Be looking at the actual TF contract. Now these contracts, they will start trading at the United States ones will start trading at 6 o'clock in the evening, and they'll go to 4:15 the next day. And then they'll add on more contracts starting at 8 a.m. Eastern time, where they add on an 8 to 4 o'clock, and then they go 8 to 4:15. And then they also add on an 8 to 10, a 9 to 12, 10 to, you get the idea. So 8 to 10, 9 to 11, 10 to 12, basically 2-hour contracts. They add a new one on every hour. Remember what I said, binary contracts move faster the closer you are to expiration. So do you think a contract that can expire in 20 hours is going to move near as fast as one expires in a couple hours? No. Okay, it'll move slower. That price will actually move slower. Remember, it has to be 0 to 100 at expiration. So it can take its time, but when it gets close to expiration, it's got to move fast. So if you trade these contracts at night that are daily contracts, they're not going to move near as fast. Now, there are some other contracts at night you can trade. You got the FTSE 100, you got the DAX there, the Germany 30. Those open starting at 3 a.m. So if you're an early riser, okay, that is a potential market for you. Also, you got the Japan 225. You got to pay a little extra money to get an underlying future feed on that, okay? We have stuff about that in our forum. It's traded on the SGX. It is not the CME, Nikkei 225, Nikkei, whatever, 225. It is the Singapore exchange, and it's the yen-based futures. So you need to make sure you get the right data feed when you're looking at it. And that one opens, I don't even know what the hours on that are. I know when it stops trading. Let's see here. I got a thing here that actually shows you all the expirations for each one of the markets right here. And let's see here. We got the Japan 225, first one at 9. So yeah, so they ought to be, opening any minute. Anyway, so we got all these contracts that you can trade. But what about at night? Well, at night, you're probably going to be a little more inclined to focus on FX. Aussie dollar, Aussie yen, euro dollar, euro pound, euro yen, pound dollar, dollar franc, dollar yen, dollar cat. You can even trade on Sunday night. These open at 6 o'clock. They got expirations every hour. You got a 7 o'clock, an 8 o'clock, a 9 o'clock, a 10 o'clock on 5 of these currency pairs. Okay? On 5 of them. Which ones? Aussie dollar, euro dollar, pound dollar, dollar yen, and euro yen. Okay? Those are the ones that have hourly expirations happening from 6 p.m. all the way till 5 p.m. Well, they're not hourly at 6, but they have an expiration at 7. So I guess they have one that expires every hour. And they open at 6, first expiration, they got 7 o'clock all the way to 5 o'clock expirations. Okay? So those are often ones that people will focus on. Now, they also all have several daily. They have 6 daily expirations. They got a 7 p.m., they got a 3 a.m., they got a 7 a.m., so we got all these expirations. Let me show you real quick so you don't feel like you have to memorize it. Right here, again, under Scanner, Binary Expiration Schedule, I show you the yellow is the daily expirations, the orange is the intraday expirations. Okay? So you can see all these daily expirations that are expiring, basically means they're 23 hours on the FX market. So they're open for 23 hours, and the other ones are open for 2 hours. So they're basically open for 2 hours from before they start. The daily expirations are open 23 hours from before they start. Okay? So if you're a nighttime trader, if you're a weekend trader, you're probably going to be focusing on FX more. Now, you also have the commodities. You can trade crude oil. That's on CL is the future there. It's not Brent, so it's the WTI crude oil. You got natural gas, very volatile, very crazy moving pair or instrument. You got gold, not gold spot, gold futures. Okay, you got silver, you got copper, you got corn, and you got soybeans. So you got a big variety of what you can trade. Somebody asked earlier, best trading times. Forex, nighttime, really, you can trade it anytime around the clock. The easiest time to trade is in the morning because there's the most volume. So like from 3 a.m. Eastern to 11 a.m. Eastern, that's when the most volume happens because Europe is open, Asia's open. Asia starts closing down, but then the U.S. comes online and there's a lot of volume. But you don't need a lot of volume. There's a lot of different trades. You can do flat trades. There sometimes are trends, especially when there's news. I have a whole free news trading plan on our site for you that you can use to learn how to use it. But the stocks and most of the commodities I trade during the day. So to help out with that question. So we got the Fed funds rate. These are economic events. Personally, I don't trade them that much. They're not real liquid, and it's sort of will it be above or below this strike, or above or below the number that comes out. They got non-farm payrolls, jobless claims, Fed funds rate. I'd much rather just trade like euro dollar on all of these events, and that's how I do trade them. Okay, but you can check those out if you want to. They have a lot more information over there. We've already talked about intraday expirations. We've talked about daily expirations. There's also weekly expirations. Okay, so there's contracts that open up, Sunday or Monday. They don't close till the end of the week on Friday. Most of the contracts expire when the pit closes. So if the S&P mini pit closes at 415, ES stops at 415. When the gold pit closes at 130, the daily contract closes at 130. When the Forex pits close at 3 o'clock, then Forex, most of the Forex contracts stop trading. There are some additional ones that will go to 5 o'clock. Okay? Weekly contracts are the exception on binaries. They trade till 5 o'clock. Okay? On just about every market except for, I think, corn and soybeans and the Nikkei. Okay? Economic events have their own, dates and times. And I recommend you probably wait on those and just get down the basics of the regular binaries first. Okay? So on a contract, you have when it expires. You have the width, how much width is between it. Because people go, where do these strikes come from? Like that was one of my first questions when I learned about Nadex. Where do all the strikes come from on Nadex? They're automatically set. Okay? So, for instance, on the dailies, they're 20 ticks wide. See how they're 20 ticks wide? So they'll always be on 3 p.m., they'll always be 20 ticks wide. And what they'll do is they'll list a certain number of contracts. Like they'll list, 15, or they'll list 9, or they'll list 21, or whatever it is, but it'll always be the same on that market. Now, they may update it in the future, but they don't change it from day to day. They may say, going forward, we're going to have this many contracts. So let's say they have 21 contracts on the, dailies. Then they'll basically put one strike right smack dab in the middle where the market's trading at, and then they'll have 11 above it, or 10 above it, and 10 below it. So if the market was trading at, and I'm just giving you an example, 2640, when this contract opened at 4 o'clock the previous day, then they'll put the middle one right there at 26.40, and then they'll add 20 ticks up for each additional strike. So that's how it's determined. Where is the market? And that will be the middle strike, and then they'll have a set width between strikes, up and down. And it's all autopilot. Nobody's sitting there manually looking at levels, trying to determine strikes or anything like that. Okay? All right, now, again, I do want to remind you, we'll go into this again, but you can trade these contracts for 23 hours. You can trade them for 5 days. You can trade them for 2 hours. You can trade them for 5 minutes. So you can get in and you can get out of the trade within as little as 5 minutes. Okay? With little as 5 seconds. Little as 1 second. Get in and out immediately. So you're not limited to the ability to enter and exit the trade. And a lot of people go, well, there's only 2 hours, so I can only do 2-hour trades. Like, no. The biggest advantage you have on Nadex is the ability to exit. If you look at a lot of the, what I call bucket shops, overseas binary brokers that are trading against you, and I got a whole video on that. They have all different things, but one of the things they usually don't have in common is the ability to exit before expiration. Okay? So you can get in and you can get out 5 minutes later. But use extreme caution. Check out our warnings on our homepage, on our website, under the exchanges. Check out why Nadex, if you're looking at other places to trade, because there are a lot of issues, and you want to be aware of that. Okay? So let's see here. We talked about trading times. There are holiday schedules when the market's closed. So they'll pop it up. They'll pop a message up when you log in. You'll see it. It's also listed on our website. It's listed in our calendar inside of our scanner. So we try to make it as easy as we can for you. We even tweet it out. So if you're following us on Twitter. All right. Now, you can trade flat, trending, or choppy markets. The first thing I want to make sure that you really get, if you don't have this already, hopefully you already have this down, is what a contract is, a binary. When I buy, the most basic rudimentary definition, when I buy, I'm saying the market will expire at or above, okay, 2680. Actually, sorry, above. I don't know what I said at. When I buy, I'm saying Eurodollar will be greater than 2680. So if I held that to expiration, which I don't have to, if I held it to expiration, if the market was greater than 2680, then it would expire in the money, meaning in the money being the statement I'm saying if I buy, I'm saying greater than is accurate. That's in the money. So the market has to be greater than 2680 at expiration. If it expires at 2681, meaning like just a tenth of a tick higher, I'm in the money. What if I buy a 2660 and the market expires at 2660? Am I profitable or not? So I'm not profitable on the trade. Okay? So it has to expire greater than if I buy. Now what if I sell a 2680 and it expires at 2680? Am I profitable or not? So if I sell a 2680 and it expires at 2680, I am profitable. Because the buy is saying the statement is true. It will expire greater than 2680. Therefore, a sell is the opposite. It'll expire at or less than 2680. Okay? So there's no push. There's no tie. Okay, that's what you call a trinary when there's a tie. It's not a binary. Binary, there's a yes or no. There's not a push. Okay? It's not a break even, everybody gets their money back. Okay? There either is a profitable or not profitable outcome. So if I buy, greater than, if I sell, less than or equal to. And I would be profitable in this, in that scenario. Buy greater than, sell, less than or equal to. Okay. Buy that expiration time. Now, there's flat markets, there's trending markets, there's choppy markets. You can trade all three of them in binaries. That's really important to know. They're not just for volatile markets. They're not just for flat markets. They're not just for choppy markets. You can use them in all market conditions. One of the things I love about them is they can be very volatile, especially closer you get to expiration. Last hour there, they can be really volatile. So you can have a flat market, but a volatile contract that changes price. You know, people go in there like, oh, but the bid offer spread is $3 or $8 or $10. I'm like, the contract can go from 20 to 80 in 4 ticks. You know, I mean, just depending upon where everything's at and how much time's left to expiration. Who cares? Okay, if I bought at 20 and sold at 80, I don't care that there was a $10 spread. I made $60 on a $20 profit. That's, you know, called not seeing the forest through the trees. Okay? And I have a whole thing about market makers and explaining how that works. So let's talk about the time and price and give you a visual example. One of the questions came up, you know, do the out-of-the-money binaries have time decay? All binary contracts have a time decay. So if some of them don't let you go in and get out at different prices, but on Nadex you can. You can get out at different prices. So as an example, if you go in and you bought at 58, okay, and the market went down, it comes down to 42. But let's say you bought at 58, market comes down, it oscillates, it comes back up, basically at the same price. Notice how it's made money. It's made $76. Okay? So if you bought the 25.40 at 3 p.m., the market moved up, the market moved down, the market moved back up, time's passed, but the price really hasn't moved that far, and it's up, you know, $18 on the trade. And then it comes back down pretty much right at where the market was at when you bought the 25.40, and it expires in the money at 100. Okay? So, as the market moved in price, the price changed on the binary contract. But as time passed, the price also changed even without having to move up higher. Okay? And that was because I was right at the money, you know, or a little bit in the money there. Here's an example showing you time decay. So if I sold at 42, okay, on this contract over here, let's say I sold it at 42, the market goes down, so a little bit of price movement, I've made some money. Now I could buy it back here at 36, so bid, offer. But notice how it goes back up to higher than where I was, or about to where I was before, and now I could buy the thing back at 22, even though the market is still not really at a different price than where I started at. So I've made money just on time decay. Now if I bought at 46 and the market moved down against me, obviously I'd lose some, but let's say it moves back up to where I was when I got in, and I bought that 25.40 contract, then time decay has happened. Why has the time, you know, that time decay? What is that? That seems really complex and overwhelming, and I don't know if I can get this, and, you know, I've been there. All right? Remember, the price is like a probability. Over here, let's say you have 4 hours till expiration, you're just a little bit below where the strike is. Okay, let's say you're at 25.30. So it's like, you got about a 44% chance of it actually expiring in the money if you bought it, or 46, you know, if we get the bid offer there. So 44% chance. It has to move up some, but not that far. Well, now it has to move up some, but not that far, but it doesn't have 4 hours. It has, say, 20 minutes. There's not as much time for it to move up, say, those 10 ticks. If the market was at 25.30, there's not as much time for it to move up those 10 ticks. We had 4 hours to move up 10 ticks. Now we only have, maybe 30 minutes for it to move up 10 ticks. So the probability goes down. The price goes down. Okay? Any question on that? I know that can be a little bit overwhelming, but if you see it as a probability and it has to move or doesn't have to move, and that probability of expiring in the money on a sell increases as I have less and less time for it to go against me, the probability on a buy of expiring in the money decreases as I have less and less time for it to move in my favor. Okay? This is an example of very little movement and time decay. So I bought it at 56, okay? So it's a few ticks above here. I bought at 56. It moves down. I bought at 56. It moves down, and I'm profitable because time has passed. I have less time for it to move against me. Now my price is 68. It moves back up to where I was at, and now it's moved from 56 all the way up to basically $80 in the mid price there. So now I'm making money. I made money from time. I made money from time and the price getting right back up to where it was. It even comes back down. The market's lower than where I bought, and now I'm profitable on the trade. Now if I sold at 52, okay, the market moved down a little bit, but it still hasn't moved fast enough. So still some time decay hitting me. Moves back up, really hitting me. Now it's at 100. Well, if I sold at 52 and I have to buy back, it settles out at 100, then obviously I lost $48. 100 minus 52. Any questions so far? All right. So this is good for all market types. It's good for long or short trades, where you can go in and you can basically say the market's going to go up and buy, say it's going to go down and sell. Okay, you can do straddle, trades, or what I call strangles now, strangles and or butterflies. So strangle would basically be buying a strike above and selling a strike below. If the market breaks far enough in either direction, you can be profitable. You can scalp. You can hop in and hop out. So I have what's called expiration premium collection. That's a scalping method. I have another method I do called momentum scalps, where I just go in and I'm in for like 2 bar movements on the chart and I'm out. Small moves, but can get some good profits. Expiration trend collection. You can do premium collection. The market moves up in your favor, stays flat a little bit, time passes, you can be profitable. You can tier in. You can add in more and more contracts if the market moves in your favor, or even not recommended, but against you. So there's a lot of different ways that you can trade it. It's not just for buying, not just for selling. It's not just for directional. You can do basically just about any option strategy you can think of. There's a way to combine it together and make a binary trade out of it. Okay? This is a list of just some, and I'm not even listing, this isn't even current. Vanilla, buy or sell. You can do news trades that time up with government and news announcements. You can do, vertical, where you buy or sell 2 different ones. You can do butterflies, straddles, iron condors, calendar spreads, diagonal spreads, long or short spreads, long spreads. You can use them to hedge a future partially. You can use them to hedge other options. You can use them to hedge even ETFs. You can use them to hedge Forex. There's a lot of ways that you can trade them. Do you need to master, and I could list another 20 off. Do you need to master all these to start trading? Is it going to make you a better trader if you have a mastery of 40 different things? Is that going to help you out of the gate? To be a jack of all trades, good at, none, right? No. Get down a couple simple systems. All right? 1, maybe 2, and just get it down right. And do it consistently. Do it in demo, get it down, and then move to live, and then add on more. But don't try to master and figure out every possible way they can be traded before you start. You'll never start. You'll never master it because you're not trading it. You're just learning. You got to go from learning to trading, trading. That's a constant cycle. You don't end the learning trail. It just keeps going. I still learn. I'm always reading. I'm always learning. I'm always trying to figure out new ways to do things. All right, so that's, sort of just your introduction, Binary 101. Here's what binaries are. Here's some basics. Here's some advanced tips. Here's how to use the platform. We went over quite a bit there. I want to do open Q&A. Let's see. Basically, is there anything that I went through? I know that's a lot of information. Is there anything that you need me to go over again that would help you out? And but we got a lot of good questions throughout it, and I tried to answer those in the ebb and flow of the webinar. Where will I put this webinar video so you can watch it again? Let me show you that. So, yes, I actually do have a book in progress. I just got to get it done, stop long enough to do it. I have all the content. I just got to write it. Thank you for asking. But over here under education, and you'll see the recorded webinars, and it'll say newest webinars. Eventually it'll go under binaries webinars, okay? But you can click on newest webinars. You can also click on, binary webinars if you want to see other webinars I've done. I do them every Monday for Nadex. I also have live webinars every Thursday. I talk about all different, trades. I do live trades on the air, on the radio show. But this is a whole section just on binaries. How to use the binary price letter, set take profits, in the money, out of the money, at the money strategies, tips, common misconceptions in binaries, mistakes. That's a big one. Price and time on a binary option, price at expiration, strike prices. I go through tons of topics. So there's much more here than you'll ever get to. Do not feel like you have to watch it all, but it's good to, maybe watch one a day or whatever, your schedule allows, but don't try to watch all of them before you start doing anything. And then here's what we always post them here, and then we'll put them in the category, like the binary section. So here, this has all my radio shows, all the newest webinars, and we roll them out. After a couple weeks, we start rolling them over into the other, into their subcategory. My favorite strategy, especially for a beginner, would be Spike Striker. So, and then right after that, 10-minute MVP. Right after that, I'd get into Boomerang. So those are my 3 probably top getting started binary systems that when traders ask me, You know, I mean, and obviously, I'm going to tell you demo trade it first, become successful before you put live cash on the line. But Spike Strikers, I think, is simplest. 10-minute MVP is pretty simple. Boomerang teaches you how the market works and really teaches about expected movements. Because, man, the biggest mistakes, I'll see people go in and buy $5 binaries all day and wonder why they lose. They have a 5% probability of being profitable. That's why they lose. Yes, they will win 5% of the time occasionally. But most people can't handle a 95% loss ratio. Not setting profits. I mean, these misconceptions, I go into so much of this stuff, like just all the mistakes that people make. Thank you, Tom. Appreciate it. So, Orlando, Emily, hopefully you saw where to find that. Again, that's just education, webinar recordings. Let's see here. I will work on a webinar for the new Connect platform. It is more, I will tell you up front, it is more challenging than the web-based platform. It is a lot more challenging than the scanner. So, but I will work on one for it so I can break down the tips and stuff. But I would start with the scanner actually first, because it goes in and it does all the math for you. And a lot of people go, oh, "That's advanced. I'll get to that later." It's like, no. You don't understand. I made it because I didn't want to do all the math. You know, and we give it away free. Like there's a course on it, walks you through it step by step how to use it, and it makes everything so much easier. Question: are you and Nadex the same or separate? Who owns who? I own Apex. Nadex is owned by IG Group. We don't own each other. We are not in any way associated. Nobody owns each other. Like Nadex is Nadex. I'm Apex. I'm a trader. So, but I'm not owned by Nadex in any way, or vice versa. Do you prefer binaries or spreads? I have a whole webinar on that. It depends upon what system and strategy you're using, Mike. So, certain systems are better for binaries. So it's what is your system? Like Spike Striker, I don't really do that on spreads. Momentum scalps, there's only a few spreads I'll do it on. Big long trend trades, normally I'm doing spreads. Every once in a while, when I tie in magnet pricing, I'll do binaries. But it really comes down to what is your system? What's your rules for entry and exit? How are you reading the market? If I pull up a Spike Striker chart, it's a flat trade. I think the market's moved. It may reverse, but flat to reverse is what I'm expecting. Well, a spread isn't going to make me any money on that. But if it's going to be a big move, a lot of times a spread could be a better choice, and I don't have to worry about, if it just moves partially, it's a variable payout, so I can potentially make more. I mean, there's $1,000 wide spreads, and I can control. It's a lot easier to control. I mean, you get in at one price, you get out at another price. You don't have to worry about the oddities of binary pricing. Trading the spreads is a lot more like trading the futures or Forex, but with a lot less risk. Can I repeat my favorite systems for a new trader? That'd be Spike Striker, MVP 10-minute, and Boomerang. So what I'm teaching you is how to do very simple in the money trades, which are by nature higher probability, and teaching you how to read volume and volume spikes. And then the MVP 10-minute is teaching you how to roll with the trend. And then the Boomerang is teaching you how to know what to expect. How far is a market going to move? Because, think about it. If I go and buy a binary contract, but the average move this hour is only 20 ticks, and I buy one that's 40 ticks away and it expires within an hour, my chances of being successful are pretty low right out of the gate. Right? So, you really want to set yourself up to have not only the right contract by using, deviation levels or magnet price levels or pivots or fibs or, whatever it is that you like to use. We have our own methods, but you need to also know whatever that level is, like, why should I expect it to move that far by that time? You need expected movement. And Boomerang teaches you how to know the expected move. Obviously, it's not always going to be right, but it's pretty on. Let's see here. Joe, yes, you do. Here's a gold chart. This is showing expected move. Data just refreshed. Hold on. I'm disconnected to my data on it, so I can open the chart for you. Let's see here. bring it up in just a second. Trying to go through, just trying to get any additional questions. So this is basically showing us how far it expects the market to move from high to low, okay, for every hour. So like here's a box, we expect it to go to the top or the bottom, or from high to low. And you can see most of the time we get pretty on track. Like that green line is showing how far to go from the high. The red showing how far to go from the low. So the orange line is how far we expect it to go. So by having that expectation, I can do it on an hour, 2 hour, 5 hour, 20 hour, whatever I want. And it lets me get just a realistic expectation. So I'm like, I think the market's going to go here. Okay, how much time should it take for it to get there? And that's what expected range does for you. So that helps out a lot. And that's also what we use for Boomerang. Divine, I have no idea what you just typed. Let's see here. I cannot recommend an amount for you to start your account. Well, I guess, honestly, what I'd recommend for you is be profitable in demo first. Figure out what you expect your drawdown to be. And then make sure you have double that. So, and trade your demo like it's live. I have a whole section about trading demo like it's live. But I mean, and nobody wants to play demo, but that's like saying no professional football player wants to go to practice before they become a pro NFL football player. Well, yeah, good luck. You know, get in there, you know, battle the markets, treat it real, okay? Don't go in and trade 100 contracts if you're only going to put $1,000 in, okay? So, you know, treat it like it's live. Give it respect. And basically, you know, I've had traders go in and say, when I make this much, I'll go live. And that made it real to them because now they can't just be stupid and let trades expire and stuff like that. What about automated systems being advertised online? There are no automated systems being advertised online for Nadex. So you cannot, nobody can trade someone else's account with a bot or anything like that. If they did, they'd be permanently banned along with every trader that was doing it. So it is not allowed because you're trading direct with the exchange as of this point in time. Not saying that won't trade in the future, but you're a direct member of Nadex. So whatever you're seeing out there, you're seeing for bucket shops. And, you know, warning for you, most of those are people who are getting a commission by referring you to that bucket shop, and they're giving you the system, so you'll fund it so they get a commission on the amount that you fund. Just trying to give you a heads up and save you some heartache. I can't speak for every one of them. I haven't looked at them all, but I've heard more than enough stories. Let's see here. What else we got? But yeah, I mean, you know, Johnson, I'd love to give you a more detailed answer of how much you should start with, but you know, $1,000 to one person is their savings for a year. To another person, you know, it's a week's pay. So, or it's a day's pay. You know, so to tell you an amount of what you should risk, that's not my place to do so. But I can tell you, be profitable in demo before you go live. That makes sense. You know, you don't have to be, but that obviously is just prudent. Let's see here. No problem, Jeff. Don't worry about it. Okay, well, just hop on our website, look around, take advantage of the education. It is all free. The scanner is free. I'd be hopping on that scanner first thing, just getting that down. It'll help you understand the contracts and make it a lot easier. All right, well, y'all have a great day. I appreciate y'all coming on. You're very welcome. Thank you. And again, I do these every Monday. I'm going to be covering different aspects about binaries all month long. Okay? So for the entire month, I'm going to go into more and more details about tips and tricks and ways to trade binaries on Monday nights. And we list the link and we tweet out the link of how to register. And also we have webinars on Thursdays where we cover a variety of different topics. So those are Thursday mornings. We record those as well if you can't make them. You know, if you're working or whatever, we record them. We post them in the same place under Education Recorded Webinars. All right, make sure you get your demo account going, and hopefully you're live. And hop on over to apexinvesting.com, and I'll be looking forward to hearing from you. You're welcome. Y'all have a great evening.